So examples of overpayments. The first thing you need to do when you're looking at an overpayment, and we're going to just talk about the bad stuff now, so we'll talk about the good stuff later, but let's say that you have an overpayment situation. What are you required to do? Well, first of all, you're going to have to identify that you have one. Some examples: duplicate payments, obviously non-covered services, medical necessity, lack of documentation, all examples of things that now are considered to be potentially ripe for overpayment. Okay, we've identified something. Now we have to investigate. I don't know if anybody knows anything about Hogan's Heroes, but you know, Sergeant Schultz, he always said, "I see nothing." Interesting approach, and sometimes people take that, but really when you're investigating, you should be taking a look at, you know, what types of things in your medical records are going to give rise for that liability. So you have reactive. You have your reactive investigation. So reactive just means, hey, I received a letter from somebody, I received information from somebody, and I need to take action. It could be the OIG, it could be your MAC carrier, it could be you know, a managed care organization letter. Basically, it's when somebody takes an action upon you and says you've done something wrong, your duty to investigate is much heightened. So that's kind of a pretty well understood thought. You get a letter, hey, we've got to look at it, look at the patients, see what's going on. It's, in fact, a lot of times in today's day and age, I don't know if anyone's received a letter asking for money back and they extrapolated across your entire patient population for a bunch of years. And those type situations are especially important to investigate because of the fact that not every patient's the same, not every medical record's the same, and you should always be looking to see, can I limit anybody's extrapolation? And for those of you who don't know what that process is, basically these third-party entities who are seeking these monies back from you for overpayment say, we looked at 10 of your 400 patients and you had this in these 10 patients, so we're going to extrapolate that rate over your entire patient population. It's a way for them to ratchet up the amount that they say you owe them back. How about proactive? Proactive's the tough part. That's what we're going to do when nobody's looking, when nobody's telling us what we should be doing. That's when you are taking steps proactively to investigate things that you find internally. I think you'll find when you talk about reasonable diligence that those items are going to change as it relates to the size of your entity. You know, what may be reasonable for a 4-doctor specialty practice might not be reasonable for a health system. So really you got to kind of look at where you are in that paradigm and understand what kind of actions you need to take. Once you do identify and you've done your investigation, and unfortunately you have to go ahead and report those instances. Reporting is obviously going to be, there's a process through your MAC carrier in the event that you do have an overpayment. Make sure you read the rules, make sure that you follow the process. This is where a lot of time comes in that 60-day rule where people say, okay, you know, they've asked me, Brian, as a lawyer, should I go ahead and report this? You know, I have 60 days, but I haven't really investigated it. The 60 days doesn't mean 60 days. It truly means 60 days to identify something and then potentially investigate and then determine amount. So when you ever think about this, and if you do have a situation with Medicare where you're having to be subject to an overpayment, just understand that, you know, if I was to give a time frame, 6 months is probably too long. You know, 60 days is probably always going to be okay. But if you're discovering it, investigating it, identifying it, and reporting it within that 3 to 4 month cycle, I think you're always going to be within that standard as long as it, you know, absent fraud or something of that nature. Once again, report to the appropriate person. You know, the things that are examples of those reporting is, hey, I have a lack of medical necessity, incorrect CPT codes, duplicate payments. Some of these things are really tough to report on yourself, right? I mean, and I'm not suggesting that you do. You need to be real certain that you don't have, like, for example, medical necessity. You know, the easy examples are, hey, I had duplicate payments, right? That's something you face all the time. And those are examples of having to repay things that is just standard in the practice. Refund, not like the good refund you get from the IRS, more like the refund you're giving to the government. So who do you pay it to? Once again, to your intermediary carrier. Use their forms, use their processes. Typically, as a point of practice, if you are subject to having to give a refund, ask your carrier for a payment plan. You know, it never hurts to ask. A lot of times, you know, I've seen clients that have, you know, $70,000, $80,000, $100,000 repayment overpayment issue, and they will try to suck it up and come up with that $100,000. Typically, those carriers will work with you, and you can establish a payment plan to maintain your cash flow. So always be in the back of your head. Don't forget to ask for time if you do run into one of these issues, whether it's a commercial payer or a state or local payer. So the medical loss ratio rules. So this is really where the rubber hit the road and made everything change in terms of going from denials to overpayments for the vast majority of how insurance companies are going to reserve their margin or their profit. What the MLR does is it allows the insurance carrier to, well, it doesn't allow, it requires the insurance carrier to have to pay back any monies that they take in premiums that are over a certain percentage. So that being said, there's two facets that they're allowed to look at. They're allowed to account any of their medical expenses that they pay in that ratio, and then basically also any quality improvements. So there's basically a bundle or a pool of money that they're allowed to say, yes, this is a medical expense. All the other stuff is limited to a percentage. So basically, when the MLR was identified in the ACA, they said between 80 and 85% is depending on the carrier, depending on the situation. That's going to limit to basically what their gross profit is. So traditionally, insurance carriers would make about 30 cents on the dollar by increasing that denial rate. Well, it was very interesting that the moment that the MLR went into place, denials went down by 48%. I know that on that specific day that everybody in this room got really good, and all of a sudden we all got 50% better than we were before, but it's really the insurance company driving that denial rate down. And it's pretty simple economics. If I get paid $1, I pay out $1 and I get to make 15 cents, or I don't pay the $1 and I make 0, it's pretty easy to understand that they have incentive now to pay versus incentive to deny. So it's important to understand the dynamic. So what's that do for us? How does that take us to that next level? Well, payments go up. Believe it or not, payments went up. Obviously, denials go down, payments go up. It's kind of counterintuitive that it would have that effect, but it does. As we said, the payments were supposed to cause the premiums to go down. Because if you think about it, if I limit insurance carriers' margin to 30% or to 15% versus 30, then that 15% should go back into the system somewhere, because they either have to pay it to the entities out there, or they have to pay it back to the folks who paid the premium. And that's what happened in some of those years. I don't know if anybody here had that happen to them, but you know, oftentimes the premiums were getting paid back. Excess premiums are going back to the actual payers of the premium. However, didn't take long for them to understand how to create a loophole. And it wasn't a bad idea. The idea of saying if we limit the amount of money that they can make, and more money will go to healthcare, reduce costs, it makes sense. The problem is you better circle around and make sure you haven't left a loophole. And unfortunately, they left a really big loophole called overpayments. So what happened was, not only can those health expenses and the quality improvements go in there, but the cost of having to collect overpayments went into that medical loss rule. So the insurance company said, you know what, that's great. You know what we're going to do? We're going to create subsidiary entities that go ahead and go out there and collect overpayments from providers, practices, entities. And so, for example, I'm sure everybody here has heard of Optum. They're owned by United Healthcare. Well, it's interesting, they make about 70% of the net profit of the entire United Healthcare. And I'm not just picking on them, they all have subsidiary entities. But what the plan now is, we'll collect an overpayment, we'll take a contingency fee on that overpayment, call it 40%, 50%, and then that money goes into that subsidiary company, and it doesn't have anything to do with what's happening over there on the medical loss rule. So they said, okay, we're just going to take our profit over here versus taking it over there. So they didn't fix that loophole. So now insurance companies, instead of denying cases, they've said, here's our incentive. We should go out and manage overpayments. And if you've looked, the level of overpayments have skyrocketed in the last 5 to 8 years. I mean, tremendously since 2012. So you have to understand that as healthcare entities, that is the main business model and focus of the carriers, your payers that you're working with on a daily basis. And when you understand that, then you can start to plan for their business model.